Hello, financial fans. Downward trend continues with my portfolio and the stock market in general. So far this year to date, my portfolio is down 13.6%. Not a very good performance. The S&P 500 is doing worse. The S&P 500, if you happen to have the exchange traded fund SPY that tracks the S&P 500, that fund is down 16.79%. IOO, which is the NASDAQ tracking exchange traded fund, IOO tracks the top 100 NASDAQ stocks, and it is down 15.43%, so I am beating the NASDAQ fund even though we're both going downwards. The only index fund that is beating me at this time is the Dow Industrial, as far as U.S. stocks are concerned, the NASDAQ and the NYSE. The Dow index, the index that tracks the performance of the 30 Dow stocks, is down. That's, by the way, the symbol for the exchange traded fund that tracks the Dow 30 is DIA, like diamonds, and it is down 12.61%, so that is still better than what I'm doing at 13.6% downward move for my portfolio. But there are still some stocks out there that I think look inviting. When the stock market is down in the pits, sad as it may seem, that's the time you want to start thinking about buying those low price stocks that are on sale. And there's a couple here that I've noticed that look like their numbers are a little bit too oversold, and we'll begin by taking a look at Bank of Nova Scotia. BNS is the symbol. Two-thirds of the way down the column on the left, the 52-week range, $53.67, so it's near its low. $53.67 was the low, and $74.86, almost $75, was the high during the past 52 weeks. And the average volume, about 1.4 million shares trade every day, and the experts consider BNS to be near fair value. The PE ratio, third item down in the middle column, PE ratio 8.45. I like that. That's less than 10. Forward dividend yield 5.36%. That's a high yield, not enough to keep up with inflation, but it is a high yield, higher than you will get with most stocks. And you'll notice the earnings per share, $6.43, more than covers that dividend. And the one-year target estimate for Bank of Nova Scotia, $64.23. So that would be a nice move upward. Next, we look at Freeport McMoran Copper and Gold. I used to own that. I held onto it for many years, and it once paid a pretty good dividend. Right now, the price $28.30 per share, and the 52-week range, $24.80 was the low for the past 52 weeks, so it's near its low at $28.30, and $51.99 was the high for the past 52 weeks for FCX. The average volume, 20 million shares trade every day. That's a very active stock, and it's considered to be near fair value. The beta, look at that beta, it's 2. It's over 2. That means that if you think the market is going to be going up in the near future, or in the next year or so, if you think the market's going up, chances are this stock will go up twice as much percentage-wise as the market in general. And if you think it's going down, and if this stock does go down, it will probably go down twice as much as the market in general. Something to think about. Forward dividend and yield, a little over 2%. One-year target, $38.27. That would be a magnificent, gigantic move upward, and of course it could happen. Rio Tinto is the next stock we look at. RIO is the symbol. The 52-week range, $53.61 was the low, so it's near its low at $54.49 currently. And the high for the past 52 weeks, $84.69. So this stock has lots of headroom. A lot of people holding on to the stock hoping it will go up to the price where they bought in. And $84.69 is a pretty high price from where it is right now, $54.49. The average volume, 3.5 million shares trade every day. This stock is considered by the experts to be undervalued. And the beta on this one, it moves around a lot less actively than the market in general. The PE ratio, 5.02, and the earnings per share, $10.86. And the forward dividend and yield, 12.59. That's a very healthy yield that would actually keep up with inflation. The way inflation's going right now, it just barely keeps ahead. And it only takes $6.84 of that $10.86 earnings. The 1-year target estimate, $75.14. That's certainly a stock to look at and study more closely. Suncor Energy is the next stock we look at, the last stock we'll look at today. Suncor Energy, SU is the symbol. 52-week range, $18.04 was the low and $42.72 was the high. So it's closer to the high than it is to the low. But still it's down from where it once was. The volume, about 5 million shares trade every day. The average volume, let me correct that. Average volume, 7 million shares trade every day. This stock is considered to be near fair value, and the beta is 1 3/4 of movement in the direction the market happens to be going as a rule. So it go up 1 3/4 times as much as the market if the market's going up, or it would go down 1 3/4 or 3/4 times as much as the market going down. PE ratio 6.37, nice low PE ratio. Forward dividend and yield from $1.46, which comes from earnings of $4.99. Forward dividend and yield 4.7, which is generally considered a healthy yield, but you'll need more than that to keep up with inflation. The 1-year target price, $42.33. And I thank you very much for watching.